From downtown Milwaukee, welcome to Money Talk with Bob Landis. Each week, professional advisors from Landis & Company Investments discuss the latest financial developments, offering timely insight and long-term perspective.
This is Money Talk for November 14th, 2025. Let's see what's happening. Let's start with the Bucks. The Charlotte Hornets are in town tonight, and the Lakers are in here Saturday night. In the NFL, the New York Giants drop into the Packers at Lambeau Field. That's Sunday at noon. And now for something a little different. How about an evening with psychic medium Molly Morningstar, which is a great name for a psychic. She'll be at the Crowne Plaza at the airport tonight. Or if you're in Germantown, Saturday, how about Candy Cane Run and Walk and the Jingle Bell Dash? And starting Sunday, it's Soda with Santa at Sprecher Brewery. Candy canes and Sprecher Beer, we got you covered. Okay, here we go. Pennsylvania police arrested a drunk driver, and I'm sure it was the easiest arrest of the night. The driver was wearing a T-shirt that read, "Drunk Lives Matter." With the encouragement of the State Department, President Trump says visas can be denied from now on to fat people. Apparently, there are no mirrors in the White House. And finally, a Manhattan attorney gave his desperately ill wife one of his kidneys. And 4 years later, to show her appreciation, she filed for divorce. Don't get ahead of me here, but that's right. He wanted his kidney back. Oh, he considered it marital property. After 4 more years of legal wrangling, the judge did his best impression of Solomon by not cutting the kidney in half. The judge said the husband will just have to get along without it, and no visitation rights. On the podcast today, we have Dave Sandstrom, Tom Pappenfus, Joel Driesing, and wrapping up the week, here's Kyle Tetting.
Well, thank you, Max. An up and down week for markets. NASDAQ down 0.5% to end the week. That's 104 points on the week. The S&P 500 up 5 points, 0.1% for the week to close at 6734. And the Dow, after dropping 310 points on Friday, still finished the week positive, up 0.3%, 160 points on the week. For the year, NASDAQ now up 19.2, the S&P up 15.7, and the Dow Jones Industrial Average up 12.3%. Dave, we got quite the shock on Thursday from markets. It's been maybe a touch more volatile in recent memory, but all of a sudden Thursday we got some comments from the Fed. I like to blame the government reopening on maybe the decline we saw on Thursday, but I think it had less to do with Congress getting back to work and perhaps more to do with some expectations about rates. But what did we see on Thursday, especially as it related to the stock market?
Well, obviously it was very abrupt, and it just when you start to think you're getting comfortable with the Fed's trajectory and how markets have been kind of expecting things to play out, all you get is a couple of back steps from the Fed chair, and boy, the bottom kind of fell out on Thursday. It was, I have to say, encouraging to see, even after the futures market looked like the bloodshed would continue today, that markets seemed to kind of right the ship today. And it really looked like people, especially in the growth sector, were back to buy and dip again. It was pretty interesting.
Yeah, a bit of a rough day for the Dow, but just 30 stocks, so hard to really put too much stock in the day-to-day movement. Certainly back to the risk on trade, to your point, in the S&P and NASDAQ. And to finish an up and down week positive, even a few nickels positive is a good thing, Tom, right? And so I think as we look at the markets more broadly, a big spike in VIX, kind of expectations through the end of the year, somewhat high, but maybe a reason why we might want to keep some of those expectations in check.
Yeah, I mean, I think a lot of the conversations this week about what's happening is, preparing people, clients that we're heading into year-end. Markets are high, valuations are high. Don't be surprised by some selling. This is kind of maybe a pressure release right now, and perhaps a typical exercise in recognizing some capital gains and taxes, as part of a strategy that a lot of portfolios and portfolio managers may be taking right now. So, not too surprising to see some volatility pick up. I tell people and always remind people that to get the gains we've seen, there has to be risk, right? They go hand in hand. And so we don't always care for it. We like when the market continually goes higher, but to get 15% returns, you're going to have to trade off some of these volatility, some sell-offs and things like that, because quite frankly, if there wasn't that risk, everybody would be doing it, and the average returns would not be 10 or 15%, they might be 4. So this is, I think, part of some normal natural movements in markets, and I encourage people to stay optimistic. But there's a lot of mixed data right now too.
I think part of the challenge in seeing these returns is there's this tendency to think, well, eventually it's going to have to come back the other way. And time to time we see it. We saw it back in April, certainly, when the stock market pulled back considerably. The challenge, of course, is that I think even when you know the outcome, if you're wrong about the timing of that outcome, it can be absolutely detrimental to you as an investor. And so trying to time even the obvious is quite difficult. And then add in that we thought it's been obvious for a while that the market was pretty expensively priced. I think stocks are still pretty expensively priced, and yet earnings have largely kept up. The market hasn't gotten more expensive. It's just stayed very expensive. And so as we maybe go back a year and go, well, ending the year last year, we thought, okay, it's going to be hard for stocks to have the same great year in 25 that they had in 24. Well, here we are now most of the way through. We were proven wrong. And if you as an investor had said, well, look how obvious it is that stocks are going to have to pull back, they did. They pulled back quite abruptly in April, especially around the tariff conversation. But of course, we clawed most of that back in the span of weeks, and then it was off to the races for the rest of the year. The stock market almost 10% above those pre-tariff peaks from early in the year, which were already pretty rosy numbers. And so I think the real challenge investors face is not, okay, when should I sell to get out of the way, but how do I make sure that my portfolio is positioned to ride through whatever storm will come? It's going to come. It always does. But there is things to be optimistic about. To your point, Tom, on the other side of that storm, all kinds of great things happening with respect to the market. Joel, one of the challenges I think we have right now, though, is that we don't always have great data on what a lot of that looks like, and got some word this week with the reopening that perhaps we'll never have some of that data as we look back.
That's right. A couple of things. I actually was just on the website for Friends of the BLS. So there's actually a group that follows the Bureau of Labor Statistics, and it's made up of a bunch of groups of economists and some former BLS commissioners. And they basically are espousing the importance of the data that are collected at BLS and the reports that are made there. And yeah, there's concern that there are some data points that we're not going to get. So we're not going to probably see how many people were unemployed or the rates of unemployment in October. And in part, that's because every month for more than 77 years, they've randomly surveyed households to try to get a representative sample of the U.S. population to find out whether people were working or looking for work. So that's something that goes into the configurations of when the Fed's making decisions on whether to keep cutting interest rates. And some of the things that we're hearing more of now are Fed governors who make those decisions, who vote on those cuts, saying, we're kind of in a fog right now, and maybe it's not a good idea to keep our foot on the gas. Maybe we should let up a little, and when they meet in December, early December, maybe they won't be making another cut in rates. Maybe they will.
Dave, we had fairly sizable Treasury auctions this week. I think about $125 billion in Treasury auction this week. And some concerns absent economic data, with continuing thoughts about where tariffs are headed, where the debt and deficit are headed, that perhaps it would be a bit of a weaker time. The auctions themselves not always all that noteworthy or newsworthy, but what do we learn this week from the Treasury auctions?
Yeah, Kyle, I think they're not noteworthy unless something really bad happens, and then it can become a precursor to maybe some things down the line. So thankfully this week, especially the 3-year note treasury that was done on Monday was met with some pretty good demand. The 10-year and 30 years that were done on, I believe, on Wednesday and Thursday of the week were a little lighter than expected, but certainly nothing of great concern. So it was good to see that rates kind of held their own this week in the absence of a lot of data, and especially with what's going on with the Fed uncertainty right now. So I think it's always a good sign when interest rates are kind of holding their own.
And it's so important to our ability to finance our deficit, our debt longer term, that we are able to borrow at somewhat reasonable rates. The challenge in Treasury auctions is that the less interest you have in the bonds, the more you have to pay the underlying investors in terms of interest rate to be willing to participate in the auction. And so if we get those environments in which the government is on the hook for far higher interest payments, it doesn't just hurt now, it hurts long into the future. Again, sometimes we're talking about 10 or 30-year Treasury bonds, not quite the 40 or 50-year mortgage perhaps, but certainly looking long-term at what is the Treasury market and what is the cost of funding it going to look like. And so I think important that at least we're still getting good interest there. There is plenty of cash on the sidelines still, plenty of places it needs to go, and I think that certainly helped.
Well, I think even you might remember back in April, we had some Treasury auction scary moments back then when I think at the time Japan was I think they were offloading a bunch of Treasury debt at the time, and there just wasn't a lot of demand. And so naturally, as you mentioned, Kyle, it does push up, yields higher. It does create a little bit of less confidence in our ability, as we're seeing market participants be a little bit wary about our ability to repay debt, given the fiscal concerns and the expanding deficit. But since that time, the markets have rebounded and it's kind of gone back to normal because, quite frankly, the joke we've always used is, we're the cleanest shirt in the dirty hamper, because our yields are just higher and still on a relative basis relative to other, sovereign debt all across the world. We're still, have a really strong ability to repay our debts, and people can feel confident about that.
And Kyle, I don't know how much the confidence will improve in this country now that the shutdown is over. It was the longest shutdown in history, 43 days. It ended Wednesday. And again, getting back to the data collection, they're starting to collect data again. They actually had already collected all of the data and analyzed it for the jobs report for September, but the government shut down on October 1st, and so they didn't get to release it. So just this afternoon, the Bureau of Labor Statistics announced that on Thursday, the 20th, they'll be releasing that report. So we're going to start seeing some of that data, but again, some of that stuff may never get collected. And it's, again, the household data is, you go to households and you say, are you working or are you looking for work? And it's hard to do that to say, at one point in time and then say, now, wait a minute, what about a month ago? Can you tell me what that is for 60,000 households? That's what they're working with there. But we also, this week we missed a couple of important reports. One was on the Consumer Price Index, which is the largest measure of inflation, and that's also something where they have a physical collection of data. And so determining prices, they go out and they sample all of these prices. And it's hard to do that 1 week, 1 month later to say, here's what it costs now, what did it cost a month ago? And the only person who's been working in the Bureau of Labor Statistics is the acting commissioner. And I'm not sure that he's been doing all that stuff.
I'm not sure he has the ability to make the number of phone calls necessary to contact those 60,000 households. I think we have these conversations all the time, right, about, well, isn't it just as simple as looking at the internet and scraping the price data to get to CPI, or looking at all the headlines of all the people being laid off and just making an assumption then? But there are methods that we have used sometimes for decades to gather this information, and it does rely on people actually stepping in and taking certain action in order to either plug a number into a spreadsheet or to reach out and make that phone call. And so it isn't as simple as just saying, well, let's just go in the Wayback Machine on the internet and figure out what the price of beans was on 11/15.
And before the shutdown, the Bureau of Labor Statistics was already 25% fewer workers than it was earlier this year. So fewer people to go out there and do those jobs of collecting and analyzing the data.
Dave, no shortage of conversations on this podcast, in our newsletters, on our website, about all of the ways that we as individuals around the world can be taken from our money or our money taken from us. I was just Googling ahead of the program to see if there was a particular day dedicated to the awareness for these kinds of scams, these kinds of fraud. In fact, there's multiple days and weeks and months where we focus on it. And I think the point in that is that this is such a significant, prevalent issue that it isn't enough to just dedicate a day to it. We really do have to be vigilant all the time. I know there was a news story at the beginning of this week about something local here that another one of those things I think that people need to be aware of.
Yeah, and many of the listeners have probably seen some of the coverage on this, but a local woman was convinced to liquidate her entire retirement portfolio, upwards of $650,000, convert it to physical gold, and then she literally handed it to somebody that showed up her door posing as a government official. Obviously sounds like an extreme case, and hopefully none of our listeners would fall for that, but it just points to the fact that these are getting more and more complex, the scams. The bad actors involved are getting better at what they're doing. So always be diligent. If you get a call from somebody out of the blue, regardless of what it is, I would be suspicious. Call, if it's your bank or your accountant or your financial person, call them back. You're never going to offend me, one of my clients, if you think I'm an AI bot and you want to call back and get to the front desk and just verify that I'm the one that actually just called you, because I always want my clients to be very suspicious of things that they are not the ones that instigated.
414-223-1099 if you want to make sure that the person you talk to is really Dave. I think, as we kind of think about what these kinds of things mean, Tom, one of the things we see is often that these bad actors are really forcing some sense of urgency, right? Whether it's the IRS scams where they're telling you, hey, we're going to come send the FBI to put you in jail if you don't give us this payment right now, or whether it's some bad actor telling you, yeah, your grandkid is in trouble, and if you don't call and lie to your financial advisor, we're going to keep them locked up in the Mexican prison for years instead of letting them out tomorrow. But I think how do you help clients navigate that sense of urgency? I know you've had a few of these over the years where clients are maybe truly believing that something bad is going to happen. How do you kind of help talk them off the ledge?
Yeah, I think in these circumstances, as we've learned in any of IT security training, is the weakest link in any security plan is the human element, and so the way to prey on that is to encourage and try to pressure someone to react quickly, and to prey on the emotion of wanting to help you. Our duty, our responsibilities to you. And, we feel very obligated in a sense of, a lot of us have very personal, close relationships with our clients, and we want to help you. And that's a vulnerability for all of us. And we kind of have to flip the script. You almost kind of do a 180. And so the way we protect that is to say, hey, I'm very concerned for you. This doesn't seem right. I understand you want to do this, but I need to know that you're always protected. And we may go through extra steps to confirm, everything that you're telling us so that we can do it correctly, do it properly. Because a lot of times if we make that misstep, it's hard to get the money back.
Okay. I'm sorry, Kyle. Yeah. There are so many scams out there, and as Dave said, the people who do them generally are pretty smart, and there are all these permutations of them, and there's no way to keep track of all of them. But we've tried on a pretty regular basis on our website to expose some of these things, and just to give that reminder to be sensitive to these things, to scrutinize a little, not to be rushed into things, and to ask questions.
And to share, right? To talk to your friends, your family, your neighbors about, here's what's going on, not just to me, but here's what I'm seeing more broadly. And if there's something that you read, something you see that resonates with you, probably worth it to share with others like you, because it's going to resonate with them. It's going to give them a piece of information that maybe they didn't have before that might help combat some of those problems looking ahead. As we come to a close today, I think worth pointing out that the final penny was struck from the Mint in Philadelphia on Wednesday of this week. I think of the generations that will not know all of the references to picking up pennies and all the other things that we do. But I think with how significant the cost of continuing to mint those pennies was, that I certainly understand the need to make that change.
I remember when I could take a penny to the sweet shop on Kimberly Avenue and buy a mint.
Yeah, no more penny ante, no more
penny candy.
Yep.
Pinching a penny and all that stuff. That's right.
You got it, and now it'll
Find
be
a
nickels.
penny, pick it up. All the day you'll have good luck.
So with that, maybe pour one out for the penny this weekend. We enjoy doing the program for you. We'll talk to you again next week.
Thank you for listening to Money Talk with Bob Landis. If you have a financial question you want answered on next week's show, email it to moneytalk@landis.com. To keep informed throughout the week, visit our Money Talk page at landis.com.